building the rapport with contractors, then giving my lands for joint venture, then understanding where there is how much they have to file their tax or how they have to manage their books. So there is where you completely help my investors as well.
Once you lose the credibility, you don't have good employees, you don't have good vendors, the vendors are not supplying on time. Real estate being a different, the construction is one part. If you lose your face in front of the customers because the project gets delayed, and that will spoil your name.
More into investing on lands. And then afterwards, some inventories due to the market corrections or whatever. There's some inventories take more time to, exit. So what happens, because of diversification, the market it supports. So if I was only in one area, the market is bad, the other area would support.
Precisely.
That is where
because the factors that play in would be different.
Different, yes.
Yes.
Young entrepreneurs would fear of tax scrutiny. Are businesses that stop people from thinking big and growing big?
See, I wouldn't, it all depends on the person's mindset, I would say.
Okay.
Because my advice is, you are in the journey of entrepreneur. You have to face the, tax officials. You have to face the tax department, and the tax department, however aggressive they might be, but they are doing their job, and as long as you are compliant and you are taken care of you are done the proper due diligence of your transaction from the tax application perspective, there is nothing to fear. The journey could get closed over the table, in the sense it could quickly get closed if they don't find anything, or it could be there is a difference of opinion. You are taking a stand and the department is taking a different stand. The journey would go on. Whenever you are done the transactions, whether have you got get it vetted by a tax consultant, there are a lot of tax planning opportunities versus tax evasion.
So you would say a planning should be done before the transaction even happens. So you are well aware that after the transaction, how do you keep your books, or how do you manage your books, or how do you basis are you going to file in the future? So that keeps your book clean. So
see, tax planning plays an important role. Because whatever taxes I would say, finance manager earlier to taking up the practice, I used to say, when you do a business, you put so much sweat. So what is your margin of profit? It is 5%, 10%, 15%. Okay. So if a person, is able to save somewhere that 5%, otherwise within the business, it is, say you are doing a 10 crore business and you are earning, say 1 crore rupees, 10% margin, but somebody is adding another 10 lakh rupees, it's as equal as doing a business of 1 crore rupees.
1 crore, yes.
Yeah. So this is the effect of tax planning. Okay.
Correct.
And tax planning also adds a lot of, whatever taxes you bear, you pass it on to your customer.
Yes.
That is how it works. So if you're able to save taxes, it is, always, either you pass it on to the customer or you invest and generate more wealth. For everyone's benefit. That is how it is. No business person is going to keep withdraw it and save that in cash. So that is this one. Tax planning is to just give a importance of tax planning in your real estate industry.
Yes.
There is a joint development agreement. The landowners, usually the massive projects are executed under the JDA, joint development agreement. But the landowners gives the land, part away with the land in consideration for a built-up area.
Yes.
So that is what is JDA. So when that happens, there are two models. Okay, one is the area sharing and one is the revenue sharing. There is a GST implication. GST is different, the application is different when it is a revenue sharing model versus a area sharing model. So there is a amount of taxation saving that can go in when it is revenue sharing. So this is a simple tax planning. It's the way when the landowners execute the JDA, whether it is taxable at the time of JDA itself or at the time of getting the property in return, the built-up area.
So that's a big question.
That is one of the question. There is enough scope for you to plan on those transactions. There are a lot of
much more.
And how do you return the investment to the investors?
Correct.
See, if they give it as a money lending, give them as interest, So that would get taxed at a regular rate. In return, they invest in your apartment and they sell you your property. That gets taxed as a long-term capital gain, which would be taxed at a lesser rate.
Yeah.
So there's a massive scope for the tax planning.
So like we mentioned earlier that before we do any financial transaction, we have to plan on calculate our taxes. So what I've realized, with the years of operations that we were doing, so there were many projects that, we had sitting down, discussed, and then got into a transaction. Though that clearly helps us understand. See, tax, I would say it is not tax saving, but I would say the right method to calculate the tax.
Precisely.
So I had many associates who had brought up their calculations. We had sat together and we had made a calculation of a project that we were landowners. And I think if you remember when we were selling the project, the calculation that an associate made with us was they were ending up paying much higher taxes. And when we calculated it was much help to show us some sections. And you told us that in this section this is the tax. So it nearly reduced our taxes by 15% because it was the right method to do it, saving taxes, but we are doing it in the right manner. So that is only possible because before the transaction or before we get into a transaction, we sat down, we broke it in detail, and we got down to that. There were situations like, now once I remembered you advised me that Ashwin, you're selling more units than usual. Than before. Now I can see more transaction. I think this was about 3 years back when you advised me that your units are more, let's open a private limited company. And then afterwards we decided, okay, that was the right time when you saw my books, because I wouldn't have opened the company otherwise. So you told me this is the right time, and I think precisely it's been more than 3 years right now where Liam Constructions, we had opened the books because you had seen more transaction in the account and you said this is the right method to go about it. I advise you that let's open a private limited or however it is. Then even after the advice, we opened Liam Constructions, and then there was a time when you advised me that Ashwin, now you need to pay your GSTs on time. So that was again the right advice, because when we had to calculate cash flow, again we had to calculate all our taxes also. So sometimes in the initial days, we make a mistake of ignoring the tax implications in the cash flow. Then it becomes a big amount that we have to pay at one shot. So I think regular payment also, that advice was very useful to us.
So the tax compliance, the statutory compliance plays an important role in an entrepreneur's journey, I would say. Because it is a surprises if you don't comply.
Yes.
Planned, you have kept some money funds in your bank account and for some investment or some project, and the tax department just issues a notice.
Yeah.
Of course, there is a due process.
Yeah.
And takes away the money if there is a demand outstanding. And your plans are completely crashed.
Yes.
So the tax compliance plays an important role. See, if you go with a simple compliance, how it plays an important role. One aspect of the tax compliance very much relevant to the real estate industry is that 2019 government brought down the GST rate for the real estate projects from 12% and 5%, 5% and 1%. They brought in saying that with the thing that it is really not a concession, because what they did when they reduced is that they eliminated the set-off of the GST that was available on your purchases.
Correct.
So basically, when you buy a cement, say 100 rupees plus 28% of it is 18%. So when you get the input, your cost is 100 rupees.
Mm-hmm.
When you don't get the input, your cost is 180 rupees. So when you don't get the input, what you do is that you pass on that 180 rupees to your customer. When you get the input, you pass on the 100 rupees to your customer. So, but when they did that change, the compliance aspect I'm coming back to, what they did is that they told that 80% of your purchases should be from the GST paid purchases.
Yes.
So what happens is that this is something which is overseen by many of the small builders. So you think is that you have a 100 crore turnover, and your material purchases are say your cost, which of course wages are excluded. So to say the GST applicability expenses are 70%. On 70%, say 80% of that you should have the GST invoices.
Yeah.
So if you don't have, you will have to pay 18%.
18%.
So have you budgeted for that?
Yes.
So you would have earned out of 100 crores 10 crore rupees. So if you have to pay, say there is a shortfall of 30 crores on which you have to pay 18%.
18%. So the margin is only eaten
It is
over.
entirely eaten into this one. And you would have negotiated the prices of the flat, everything, and you earned the 10 crore rupees and entirely taken away by the department.
You're
You don't have
right.
anything to reinvest.
You're absolutely right. So even that 3 years, 4 years time that is spent in the project is completely gone without any profit. So
this is the importance of the tax compliances, because it comes as a surprise.
And even this recent surprise that has come, chaos going around it, is that when a land buyer buys a land and gives it on a JDA, as soon as the JDA transaction is completed, it is treated, you have to pay the tax. Now, so sometimes it's very confusing on how is that treated even as an income. You're just given it as a joint venture. So if it is sold, I can understand that, okay, if it is sold, you earn the income and you pay the tax for it. Here, you just entered into a JDA. So how do you, manage such situations around?
No, this is a specific tax question, I would say, because it's a prolonged litigation that has been going on this aspect. Don't get into the details, because it is a technical thing which may not be.
I feel that is not fair.
It is not fair. That is why it has been litigated.
Yeah.
It has been litigated. But that is resolved now. As of now, it is resolved. Before that also, the government brought in some relaxation, again, that relaxation has been restricted to only individuals and HUFs, which are giving the JDA, but not applicable to if the land is owned by the partnership firm or private limited. But there's a different, there's a judicial judgment by the Supreme Court which gives you the advantage in other cases other than individuals and HUF also, where it is taxed only when the OC is received. Okay, unless you start selling it earlier, the landowner share. This issue is more or less settled now. That has been a prolonged litigated issue in the real estate sector.
So that sometimes when it is unfair to such things, it gets more difficult.
It was very unfair, because how can you expect a land owner to pay the tax when he has not received
the income?
Yes.
So don't you think these kind of rules making investments and the flow of cash in the market more difficult, because such rules are making it difficult for people to invest?
Tax department, in their endeavor to generate revenue, which is their job, they get little more aggressive in that without looking into the practical aspect of.
Now, don't you think this also affects the Indian economy as a whole?
Of course it affects.
Because when you are worried about such matters that is not practical, investors step back in the market. So many NRIs and foreign investors also step back. This reduces the transaction. In return, the tax officials also get reduced revenue. So it is a complete cycle.
Of course. See, these aspects from a practical point of view, not only the narrow prism of the tax collection. Because I would always say one thing, when the businesses, I would say it's impractically applicable tax laws. What happens is that it discourages the honest businessman. And it would encourage the people who do the business in a dishonest way, even to the tax department. Probably, dealing with the department in otherwise closing the matters and all that. It doesn't encourage the person who want to do honest business honestly and
to maintain his books clean. So that discourages.
And secondly, I would always say, as far as the tax department's perspective is concerned, they should have a liberal approach as for the small businesses, which is there in this presently. There is a presumptive taxation and all.
So
when a business is a small, probably he has to save all the corners and survive and fight that and sustain himself and grow big. But suppose the person grows big, Okay, and attracts an investor. See, he's forced. He could have done something when he was a small, doing some accounting adjustment to reduce his taxes, but you allow him to grow, and you have reached a stage where he has an investor. Is there a scope for him to now do any accounting adjustment or anything? No. See, then he is bound to pay the taxes honestly. So,
Yes.
liberal approach for the smaller businesses, the motto of the government, of the present government, the ease of doing business. That makes sense. You allow the businesses to grow beyond a certain limit. There's no scope for the reducers for any evasion.
So you feel that amendments should be made as a priority so that businesses could
Of course.
new businesses
yes.
could open, and also we would have more businesses continue for a long period rather than getting failed in a year or two.
Yeah. Because you have the responsibility of running the business. So when you are made to run to the department, you are made to answer a lot of queries and all that. What happens is that the shift, instead of managing the
focus on the
shifting on the business, you shift your focus to the otherwise, and also it demotivates many of the people
to even open up a business because they've seen their friends and family.
Of course, we always say that tax enforcement has to be there.
Yes.
Because the tax are there to be complied.
Yes.
So if there is no enforcement, what happens is that you are encouraging somebody who is doing the dishonestly, doing the business of not paying the tax. So tax enforcement has to be there, but it has to be seen in such a way that you are going after the right people who are not compliant, and you are not troubling somebody who is compliant, who has genuinely bona fidely done some mistake. There should be a liberal approach of doing a compounding and paying the taxes with no penalty, with interest, and closing the matter. So he shouldn't be a bona fide taxpayer who has bona fide done some mistake, shouldn't be troubled much. Whereas you allow to go after the people who are dishonest with respect to tax compliance is because it is like incentivizing the dishonest business people.
So that is right, Anil. I think you are very clear in that point. Wherein, since I am into multiple business operations, so what happens to me is that as an entrepreneur, I try to do more of what I earn more. Now, if this area, this investment, this plan worked out more, I will try to do more of that. Now, if, for example, Sajapur Road is giving me more returns, I will go to Sajapur Road more, and I will find more properties there. Just a small instance in our case, a small business which is under fitness. I could see that, first the tax implication for GST was 18%. Now, the revenue is only hardly 20 to 30%, wherein we pay 18% on the service GST. After me running the business for 5 years, or 4 years, I think they changed the law to 5%. So we were forced to pay the GST at 18%. Then when the government realized it's too much, they reduced it to 5%. So what happened for me, the interest of doing and growing in fitness industry was eliminated. As my mindset, it got to me that
better late than never. Okay, because that is what it is.
Now if anyone tells me open another center, I'll think twice. But if you tell me let's go and invest on real estate, maybe I'd feel okay. There's more. Definitely, there's also capital gain in real estate that we could come to. But this is what it kind of in the back of my mind. I have a sixth sense that the tax was so much. Maybe today they reduce it to 5%, so there is some opportunity to get into. But this is what happened to me as an investor. Any guys who are already in the industry, this sudden changes. Now they realize that suddenly that should go to 5%. So the change is made, which is a good thing, which should have been done long back.
Precisely. Yeah, it should have been done long back. Healthcare sector, you would say, wellness sector.
It's a wellness sector, yes.
And moreover, it is a B2C customers.
Customers, yes.
Okay, see, when you have a very taxes like 18%, what happens is that people cannot grow organized way. What they create is that they will put one center in their family name.
Yes.
you are discouraging
A businessman to even grow. Yes.
Yeah, you segment the businesses. You keep multiple centers in multiple names, and all this happens. And a person, having an advantage versus the person who is honestly want to pay the tax. So from the government point of view, also, if it is 5%, people probably everyone would come and pay it. Otherwise, okay, this is part of and also the industry becomes standardized. 5% GST there, it has to be paid, and the customer also doesn't mind paying that 5%. But when it is higher rate, all this unwanted things come in.
Even in my case, if you see it, I always wanted to play to an extent risk as well as also have a backup plan. So now, say for example, any project has a financial or funding issue, I've created multiple backup plans. Like maybe I have some rental incomes coming, or I have property that I put for sale in any of my properties that I have. So I have funds even coming from there. Then we have another backup plan wherein we have investors also onboarding, and we're giving them certain units from a property. We go up to 5% for investors in any project. So we don't even dilute much so that we don't go overboard, so that we don't plan rent. So 5 to 10% is what we're okay with to give any investor. So we have multiple options, and even now this year I'm planning whether to make sure that I will increase my rental income so that tomorrow if anything happens I can rely on that. That is what I meant by wealth planning that we have to get into. Yes.
Precisely. You should have the backup plans.
Yes. You would see many profitable business on your daily basis of your career. Is it common that a profitable business could also fail?
Yeah, of course.
Yes.
Because, you have the best examples of Nokia and BlackBerry. The iPhone was introduced, I think it was 2007. Everyone wrote off. They didn't even acknowledge that, they could be a disruptor. I think Google came with the Android much later. This one to acknowledge that, okay, this is going to be disruptive. They probably could have adopted themselves, I would say. But, that is the best example of this one. You're not keeping yourself in tune with the
trend that is
coming in. Okay, you always should be watchful what is going on, what could come in the future, and what, adopt yourself and be market ready, caught off guard. I would say this is one where your market conditions are getting affected.
So you should be very closely monitoring your competitors.
Of course. And what technology evolution, and no business is stable these days. Everything is evolving. So always keep yourself adapting to the situation. Second thing, this is a market-driven disruption, I would say, where a profitable business can collapse over a period of time, very short period of time. Second is that, financial mismanagement. I'll give you an example of financial management of my own.
Your client?
I shouldn't be talking about this, but it is, specific about.
You don't have to give me his name or his company.
Yeah, but okay, we as a professionals, we give part per this one. Even if it shouldn't be indirectly also indicating who is it is. Okay, but it is like this. It was into a logistic business, and the company was running well, profitably with certain routes. This one, the person, probably, he had a route covering the vehicles flying from the Delhi to Bangalore, the Chennai. It was going well. He had a set of customers. It is load factors plays an important role, I would say. Logistics business. What it is that he wanted to introduce one road which is covering east. So from Delhi to Varanasi to Kolkata, and this side, Vishakhapatnam and this. But he didn't make an arrangement for the capex. Okay, whenever you introduce a new route, what happens is that it takes its own time to that load factor to capture. You don't get immediately when you run the vehicle, you don't get the customers to have your full capacity utilized. So he didn't make the cash flow arrangement to, budgeting for that. He didn't make the financial arrangement for that. What happened is that it takes its own time, probably 6 months for that capacity to get utilized. Then once the capacity gets utilized, you have a 60 days time period for the people to pay you. You have to meet the fuel expenses and all immediately.
Yes.
So what happened is that it shook the entire his existing business as well, and it went into a loss.
So he had to pump in a lot of money to.
It went into a loss because he didn't make a financial arrangement for the growth. The existing business surpluses couldn't sustain that cash negative that was expected for a new segment of the business.
And how long was he running the business for?
It's been a good amount of years,
Okay.
It was a good amount of years, but it didn't take about 1.5 years to.
So
collapse.
one wrong decision could.
Yes, this is a financial discipline, financial planning, kill a profitable business.
You're absolutely right. A wrong decision in real estate also is a big decision because it involves a lot of money. Before you even get into a decision, we take at least 6 months to 1 year of planning. One decision could take us 10 years behind. This is what we also realize as in the real estate industry.
Yeah, because see, when it is investment is involved, which is more so in the case of real estate, you have to be more rigorous in planning as compared to the service industry.
Yes.
Service industry, if you are not, the variable cost is high. What you can do is that you can just cut down the variable cost.
Yes.
Like you fire the employee, you reduce the manpower and reduce the cost and sustain the business.
Correct.
In case your client is you lose the client, reduce your cost. But whereas in the real estate and all that, if you are stuck badly, it becomes entire business could collapse.
Could collapse, yes. Thank you, Anil. I think it has been a very insightful session.
It was my pleasure to have this nice talk with you. I told you earlier also, knowledge is something which is God given, and it's a pleasure sharing that for the benefit of many people.
It was a wonderful session with Mr. Anil D'Souza. So you could stay tuned for more updates. Thank you.